Thank you for watching this video. Today we will be doing technical analysis on the stock market for Tuesday, December 29th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. We're going to start off with the S&P 500, and the S&P 500 was down 22 basis points today, and we closed at 3727.04. The first chart that we're going to look at is a 3-day, 3-minute candlestick chart of the S&P 500. So each candlestick on this chart does represent 3 minutes of trading. The reason I went with this chart is I wanted you to be able to see this week's action so far. Of course, we had the gap up on Monday. Today we also had a gap up, but then we had this intraday reversal. So oftentimes this type of a pattern marks the at least short-term top in the markets. Now, only time will tell if that's going to be the case. Today wasn't too bad. We were only down 22 basis points, but you can see that the highs of the day were at the opening of the session, and we closed right near the lows of today's session. So that type of price action is not positive. Now, if we look over to the left, we can see that where we finished up today was about where we opened yesterday. So again, overall for the last couple of days, it's not that big of a deal, but I don't like the fact that we opened at the highs and closed near the lows of the session. That I do not like. The next chart that we're going to look at is a 6-month daily candlestick chart of the S&P 500, and this green line way down here, that is the 200-day moving average, and where we closed today, which by the way was the second highest daily close ever on the S&P 500, so we need to keep that into perspective. But we're about 16% above the 200-day moving average where we closed today, so it just points to the vulnerability of the overall stock market with the S&P 500 trading that far above its long-term moving average. The next chart that we're going to look at is a 6-month daily candlestick chart of the IWM. The IWM is an ETF that tracks the Russell 2000 Small Cap Index here in the U.S., and the IWM was down 1.89% today, and we've had 3 negative days in a row in the IWM. Now, this small cap area has been really the leadership area in the U.S. stock market for many months now. So the fact that we've broken this uptrend and we've had 3 negative days in a row in U.S. small caps, that to me is starting to show some signs of weakness in the overall market. So if we lose this leadership area, which it kind of looks like we are, at least for now, in the short term, this could mean the market is going to start to pull back. And we are trading a long ways above the 200-day moving average in the small caps. So just something to keep your eye on there, guys. But the fact that we have broken this uptrend line with 3 negative days in a row in the small caps, the first time that's happened for many months, that is really something that I'm concerned about here. So if you have profits that you want to hold on to from the last couple of months or the entire year, probably not a bad idea to rebalance your portfolio, take some profits, maybe lighten up a little bit here in the short term, of course, at your discretion. And also, guys, if you do not have a rock-solid risk management and trend direction system in place, which most people don't, okay, I would encourage you to do so, because these markets are not going to get easier going forward, okay? It's been an extraordinarily unusual year, but these markets have changed over the 25-plus years that I've been involved. And with bond yields as low as they are, but bond yields actually ticking up as of late, which means, the bond prices are falling. The 60-40, 70-30 portfolio of old is not going to work going forward. The bottom line is, whether you're invested in a 401k, your 403b, your IRAs, trading, whatever, you need a system that helps you cut your losers and let your winners run. For me, that system, which I developed, which took me over 20 years to figure out, it's called Simple Market Signals, and I make it available to the general public for a very, very modest price of $19.95 per month, $19.95 per month. So with that said, I'm going to tee up some information about Simple Market Signals. Do you know the level of risk in the stock market on an ongoing basis? Simple Market Signals. It's like having risk radar for the U.S. stock market. Simple Market Signals is less than $20 per month. Simple Market Signals is for financial professionals and individual investors. What is it costing you to not have this information? To get started, go to simplemarketsignals.com.